Good evening, and welcome to today's financial market report. Let us start with a look at last night's U.S. stock market. The three major indexes closed essentially flat. The S&P 500 ended at 7,575.39, the Nasdaq at 26,281.61, and the Dow at 52,637.01, with all three showing virtually no change from the previous session. Pre-market futures also showed no directional movement. However, beneath the calm surface of the indexes, we saw significant divergence at the individual stock level. The primary driver was the strong performance of AI computing leader NVIDIA, which surged 4.27% to close at $210.96, attracting a very high concentration of capital. The Bitcoin spot ETF also rose 1.14%, indicating that sentiment in the crypto space is stabilizing. The QQQ and SPY edged up 0.36% and 0.47% respectively. But notably, the innovation ETF ARKK fell 1.78%, suggesting that money is rotating out of high-valuation growth stocks and into more established AI hardware leaders. This style divergence is quite pronounced. Moving on to global macro data. The 10-year U.S. Treasury yield is currently at 4.57%, fluctuating within the 4.5 to 4.6% range in recent days. This suggests that market expectations regarding Federal Reserve policy have not changed direction. The VIX Volatility Index stands at 15.03, which is in the low normal range and close to the greed threshold. This indicates a high tolerance for error in the current market, but we should remain vigilant about potential sudden spikes caused by unexpected geopolitical events or policy shocks. The US dollar index is at 100.97, continuing its weak and volatile trend. This weak dollar environment provides a relatively favorable external liquidity backdrop for emerging market assets, including shares. WTI crude oil is at $71.41 per barrel, with mild fluctuations. Geopolitical tensions in the Middle East provide potential upward support for oil prices, but weak short-term demand expectations are limiting gains. Spot gold is trading at $4,104.10 per ounce, maintaining a high level of volatility. With escalating geopolitical conflicts and a weak dollar, gold's safe haven and value preservation functions are coming to the fore. On the currency front, the onshore renminbi is at 6.7667, while the offshore rate is at 6.7810. Over the past 7 days, the onshore renminbi has appreciated by about 0.42%, and the overall appreciation pressure is manageable, which helps stabilize foreign investor confidence in Chinese assets. However, yesterday the U.S. Department of Commerce further expanded its export restrictions on AI chips to China. The new rules extend the restrictions to include edge computing and autonomous driving specific AI chips, and tighten controls on equipment exports for authorized advanced packaging technologies. China's Ministry of Commerce immediately expressed strong opposition and said it would take necessary measures. This is a confirmed major negative event that directly impacts a share AI chip and advanced packaging supply chains. At the same time, in the Middle East, Israel and Hezbollah in Lebanon have engaged in their most intense clashes in recent years, and the UN Security Council will hold an emergency meeting. This further fuels risk aversion. Taking everything into account, our pre-market sentiment for today's share market is for a lower open. The index direction is likely to be downward. The Shanghai Composite is expected to open lower and then trade weakly, with significant resistance at the 4,000-point level. The Chi-Next index may fall even more, dragged down by the technology sector. For sector allocation, we suggest focusing on energy and utilities. The Middle East conflict is boosting oil price expectations, giving the energy sector both a safe haven and event-driven rationale. Utilities have defensive qualities when risk appetite declines. The sectors to watch out for are AI chips, semiconductor equipment and materials, and advanced packaging. The new U.S. export controls are a precise blow, and these sectors will face direct short-term impact. Investors should avoid share companies with high correlation to US AI chip leaders. Northbound capital is more likely to see net outflows. Against the backdrop of global risk aversion and escalating US-China technology friction, foreign capital tends to reduce holdings of high valuation, high beta emerging market tech stocks. Our key directional conclusion for today is this: technology export controls combined with geopolitical tensions are triggering a global risk-off move. For shares, it's a day to prioritize safe haven assets, while the technology sector will face significant pressure. Our probability assessment is 5% for an up day, 20% for a sideways day, and 75% for a down day.